In this video, I'm gonna cover the most recent interest rate hike on Toronto's real estate market and whether is it gonna crash or the market is not gonna be affected by interest rate increase. Because many people are asking, let's say, what will happen if the interest rates keep going up and up and up? Is the real estate market in Toronto is gonna crash or what? At the end of this video, I'm gonna tell you my prediction about the interest rate hikes in 2022. Hey everyone, this is Ariel, my Toronto real estate agent, and in this video, I'm gonna tell you about the impact that interest rate hikes are gonna have on Toronto's real estate market and whether is it gonna crash or not. Many people are asking, when is the crash? Okay, today I'm gonna tell you about it. But first, let's look at some numbers. All right, there are a few important numbers that I want you to take a look at. The first one is the historical interest rates in Canada. The second one is the inflation rate, and the third one is home price index. The fourth one is the unemployment, and the last one is the population growth in Canada. For now, we are gonna take a look at the first one and the third one. So basically, this is the interest rate chart. So whenever I say interest rate, it's basically overnight lending rate that is set by Bank of Canada. And when we talk about 25 basis point, means that 0.25%. For the purpose of this video, I'm gonna take a look at 2008 financial crisis and the rate increase that came after that. If you can see here, by April 2009, after 2008 financial crisis, the interest rate dropped to 0.25%. Pay attention to the white arrow here. We are gonna talk about it later. In May 2010, interest rates started to increase. By September 2010, interest rates, or basically overnight lending rates, reached to 1%. And from September 2010 up to December 2014, the interest rates stayed at 1%. Let's take a look at the housing price index. The white arrow was the point that we have started to increase the interest rates, and the blue arrow is the place that we have started to have 1% interest rate overnight lending rate from 2010 to 2014. Let's take a look at the housing price index from 2010 up to 2014, and later on you can see it like up to 2022. The housing price index was going up in Canada, and it is Canada. If you look at Toronto, the market has been a little bit different. So now we are going to take a look at Toronto's housing. First of all, in order to see all these charts and data, you can go to trrealestateagent.com and click on the market, and then you're going to have access to all these charts. I mean, those charts that are related to Toronto real estate market. This was the point that we started to increase the interest rates in 2010 and up to 2014, which interest rates were exactly 1% for almost 4 years. By interest rate, again, I mean overnight lending rate. So you can take a look at what was happening in Toronto real estate market. And as you can see, both the housing price index in Canada and Toronto real estate market were moving upward. So my point is that an increase in interest rates in the long term is not gonna have a very huge impact on the housing market in Toronto or in Canada. More specifically in Toronto, in the city of Toronto, we are going to have a correction, or you might name it a crash, in the next few months. So I guess Q2 and the third quarter of 2022, we are gonna feel the impact in the city of Toronto. But the impact of the market correction in the suburbs of Toronto, in my opinion, are gonna continue in 2023. So the correction and crash that's gonna happen, well, basically it's happening right now in the suburbs, is gonna affect them a lot. But if you are looking at the market in the city of Toronto, especially condo market, or in general the pockets that are in the central Toronto, you're not gonna see a huge impact of interest rate increase on the market. Well, basically my point is that if you see an impact, or if you see buyers are sitting on the sidelines, that's only the psychological effect that buyers have at this point, that hey, if I don't buy now, that 2-bedroom Lakeview condo in downtown Toronto might be cheaper tomorrow. That would take out a little bit of demand from the market. And also some sellers who have been rushing to get into the market are providing more inventory to the market. So in my opinion, in the next few months, you are going to see more inventory in the market, a little bit of correction in the central Toronto, bigger corrections outside of Toronto like suburbs. However, the psychological effect of the interest rate increases are more than the actual effect of the interest rate increases. So as you can see, if your timeline of investing in real estate is 5 years or 10 years, you should not be worried about it, in my opinion. And this is not financial advice, by the way. And I push the content out there for my followers. So I'm not advising anybody for any financial decisions, but I can tell you that in real estate market, time in the market is more important than timing the market. So if you're a speculator and you want to flip the houses, for example, buy a house today and flip it 6 months down the road, you're gonna have a problem. But if your timeline is, let's say, for example, 5 to 10 years, if you look at the numbers, these are the numbers since 1996 till now. And as you can see, any point of time, if you had bought a property in Toronto and you kept it for 5 to 10 years, you could have been built equity on that property. So my point is that do not try to time the market. However, next coming month, let's say second quarter and third quarter of 2022, if you're a buyer, you're gonna have more opportunities to secure a deal for yourself. All right, everyone, I try try to keep this video as short as possible. Hope you enjoyed today's video, and if this video brought any value to you, please share it with your friends and subscribe to my channels. Have a wonderful day. Bye bye.